Absolutely.
Brent price is nearing 50. All problems are solved.
I'm so excited.
Let's get right to that question, John. $50 oil, it's paradise on earth, right? Tell us how you feel about prices inside Chevron now.
Well, during my career, I've seen oil prices go up and down, and I've been with Chevron 35 years, and this is the 5th time prices have declined 50%, and we never see it coming. So it's very difficult, but supply and demand are the difference between, the surplus or shortfall is the difference between two very large numbers, supply and demand. And when we get it out of balance in our business, prices can rise quickly, they can fall quickly, and usually it requires just oil fields to decline over time and come into balance. So capital's being withdrawn right now, and the markets are coming back into balance.
I saw on one of your recent calls, I think the number was around $52 or around there is what you're planning for, I think, for 2017 prices. Is that still on target for you?
Well, what we did in March was, at our big meeting with security analysts, is we just showed what our cash in and cash out looked like at 52, which was the average for last year. We actually look at a range of prices in a range of scenarios. Now, certainly our price decks, if you will, the different cases we look at have come down over the last few years, but we don't see the low prices we've seen in the early part of this year and last year as being sustainable. And the way I define that is, can they draw capital? Can they draw investment? Right. There are some things that are economic at prices less than 50, but most of the world's supply is not.
Okay, so you have probably literally buildings full of PhDs, and so what's the number? Share with this intimate audience. What's the number, John?
Well, we have just under 60,000 employees worldwide, and they cover the waterfront. We have
not the oil price of oil. That's the number.
Oh, you want me to pick? You want to talk about people?
No,
I was hoping to divert you away from prices.
Undiverted.
No, the prices we have today are not sustainable. Now, there are forces at work that could keep putting some supply on the market right now. The reason I can't give you a precise forecast is I don't know what behavior will be.
Right.
When you look out there, Saudi Arabia has the capacity to produce more than they're producing today. They surprised me during the downturn that started in late 14. They increased production into a surplus market. That isn't something they've usually done. So markets can fool you, behavior can fool you.
Right.
What I know is that over time, to draw investment capital, prices are going to need to be higher than they are today.
Right, okay. Let's get to Saudi, because there's so much interesting stuff happening there. How do you view the changes in the oil ministry there and the overall perspective? You have to be not just an engineer and a geologist, but you have to be sort of a court observer in your job. So what do you see from that perspective?
Well, I know the former and current minister. In fact, one mentored the other, so I think it'll be a very smooth transition for them. But there are big changes taking place in the kingdom right now.
Right.
And very bold moves that are being taken to try to transform the economy. Oil is their competitive advantage, so I think they'll use that competitive advantage, whether it's IPOing or partially IPOing Aramco or other social changes that are taking place in the kingdom. But the reforms are very big and will take time to put in place.
Like, what exactly is big that you see?
Well, certainly the social contract between the kingdom and the people is changing. Saudi life is heavily subsidized, and so they're changing that, and they're trying to diversify and broaden the economy. And but to do that will take a lot of time.
I forget the exact year, the prediction that they would not be dependent on oil. Whatever the year was, it seemed absurd. 2020. Okay, so 3.5 years, they're going to be off oil, which seems totally unrealistic.
I think oil is their competitive advantage now, and I think it'll be their competitive advantage for a long time.
Okay, let's play the game of risk here, because of course it is a game of risk when thinking about oil. Iran, how do you think about how they're calculating their role in the market as they sort of come into the game?
Well, they're re-entering the Western world, so to speak, and so their first objective is to restore their production to the level it was before. So they had a lot of oil that was effectively shut in, couldn't be marketed, and so they're bringing that oil back on production, and so that's their first priority. Over time, they also want to draw capital to develop the oil and gas resources that they have. And we'll see if they can put together the kinds of fiscal terms and other policies that will allow Western technology and Western companies to participate.
Well, can they?
They can.
Yeah, will they?
I don't know.
How are you planning for that?
Well, let me give you an example that's nearby. We spent 10 years preparing to enter southern Iraq when that emerged as an opportunity, and we chose not to bid at the end of the day because of fiscal terms and other risks that we saw. And so every company makes those decisions. My company, we have plenty of options right now. We've got a terrific position in the Permian Basin here in the U.S., and we've got other opportunities to invest our money, and we'll take a look at the options once it's legal for us to do so,
right?
And stack it up against the other opportunities we've got.
So when you think about OPEC, do you think that it is an effective cartel anymore, or has it lost its teeth?
I think OPEC has changed a lot over time. Everyone remembers the embargo, or at least those of us that are old enough, remembers those times from 30 or 40 years ago. But OPEC has changed a lot over time, and they haven't behaved like a cartel for a long time, actually. And Saudi Arabia recognizes that. Saudi Arabia has learned from their experience that they were de facto OPEC in terms of having surplus capacity and managing that surplus capacity. Virtually every other OPEC country has been producing all that they can. And so Saudi Arabia has just reached the conclusion that as market share of OPEC went from 50% 30 or 40 years ago down to a third, that there are other players in the market today and they can't manage the supply alone. I mean, remember, Saudi Arabia is about 10 million barrels a day in a 96 million barrel a day market. They're not the only source of supply out there.
So should we call OPEC dead and dusted?
Oh, I wouldn't say, no, I wouldn't call it that, because you never know what might come going forward. But I don't expect them to act like a traditional cartel and significantly withhold.
So what would be the
supply.
right framework for us to think about OPEC then? If it's not a traditional cartel, it's a loose group of frenemies who get together occasionally and...
It's countries that have some a common natural resource, and having dialogue around that resource is something that they have an interest in making sure that they have some degree of alignment,
right.
So that they can, to a degree, influence the direction of prices and policy.
Right.
But I just don't expect it to act like a cartel.
Okay, so the first tankers left the U.S. exporting oil. Why isn't the U.S. part of OPEC?
Well, we have antitrust laws. We have antitrust laws in this country to start with. So there's a rich history of that. So we compete out there, and we're competing with lots of producers from around the world, but we don't engage in that kind of behavior.
We're an exporter now.
You know that.
We're an exporter now.
We are.
Yeah.
It's a good thing. The U.S. is still a net importer of oil, but what's happened with hydraulic fracturing is the oil that we're producing is lighter. And so it's not a good fit for the refineries, the coastal refineries we built in this country, which were geared toward heavier Middle Eastern oil. And so it's really just an efficiency argument that the U.S. will import this heavier grade of oil and export the lighter oil.
Well, it was pretty incredible. We had a story in the Journal about a tanker full of that light crude. It was making its way from Texas, and it was it made its way, I think, to somewhere in Germany, a refinery in Germany, which is kind of incredible. When you see that, you talked about your career at Chevron, 35 years, like, how does that make you feel? Do you feel like a tingle or a fear or an elation? Like, it's a pretty incredible milestone.
Well, the companies in our industry are very clever, and we will work arbitrages away one way or another. So if there's an opportunity to move crude or products and do it more efficiently, save costs, get it to a market that needs it, we'll figure it out. And we've been doing it in this country. If you think about the growth in the center part of this country, we've been railing product. No one ever thought we'd move as much oil as we've been moving by rail. We move by pipeline. We'll move it by truck. We'll move it any way we have to. And then as logistics costs can be arbitraged away by a different form of transportation, we'll do it. So we're a very marketing-oriented industry to try to find a way to get a higher realization for whatever product we're selling.
All right, and how do you view the U.S.'s role in the world from a geostrategic standpoint now that the balance of oil production has certainly changed?
Well, the U.S. remains a formidable country. A lot of people around the world are saying that the U.S. has less influence, but when you travel overseas, as I do, we're still very much respected, and both the size of our economy and what we contribute. So the U.S. still continues to play a big role, and the strength in our oil business is only solidifying that. I think there is a perception by Americans that this is making us stronger, and I think the strength of our industry, both oil and our ability to export light oil and natural gas, which we're now an exporter of natural gas, both are just an indication of the resource strength that we have along with technology and other fields.
But do we need to be as close friends as we have been with, say, Saudi Arabia if we have more oil independence? That's sort of the view apparently the Obama administration is taking.
Well, I think it's in our interest to have a dialogue with countries around the world and to be a strong force. You know, the U.S. has typically set the example. We've set an example on trade. We've set an example with how we conduct ourselves overseas. I mean, a company like Chevron is welcomed everywhere around the world, and most American companies are because of how we conduct ourselves, the technology we bring, education. And so for the U.S., the U.S. can be maybe it's an overused term, can be a role model both at the company level and at the country level in terms of the principles that we exhibit.
Okay, so you're not for breaking up with Saudi Arabia?
No.
Okay. Let's get to Chevron.
Sure.
Big changes at your company.
Yes.
If you look at the capital budgets from a few years ago to the capital budgets of today,
Yes.
those are massive differences dollar-wise. They're big aggregate numbers still, but on a percentage basis, you guys have cut a lot. So tell us about the philosophy behind that. And I just sort of layer on another question on that. Can you be a major if you're not willing to go major? And by that I mean big projects, and we'll get to some of those questions. But you've taken a pretty conservative tack here, so tell us why, and maybe just walk us through your philosophy around that budget.
Well, when 50 to 60% of your revenue goes away, you respond pretty quickly. But the truth is, for us, we were in a period where we were taking on a number of large projects. And so we have 2 big LNG projects in Australia, and we had a couple of projects in the deep water, Gulf of Mexico, and others. And so we were taking on a lot. We kept our balance sheet very strong to do that. And we're now completing those projects. And then, so we're not starting very many new large projects.
Isn't that dangerous?
Well, we're being selective
Yeah.
about it. We're fortunate. We have the opportunity to bring these projects online. We also have a big position in the shale that I referenced earlier. And so we are increasingly going to put our capital into shorter cycle projects. Now, there are some exceptions to that. We've got a big project in Kazakhstan. We've had a lot of success there over time. So we'll be selective about initiating new projects. But the facts are we've got to balance the books right now with low prices.
Of course, long term, right? The problem with your business, of course, is that your product's priced on a spot basis, and you have to invest over sometimes decades. Right. So if one views that supply and demand do come into balance at some point, if you're 3 years down the line and perhaps you're not investing in big new projects, maybe you're going to be at a disadvantage 7 years from now. I mean, that's sort of the wrap on Chevron right now. Yes, it's being conservative, but might it be squandering what might be its necessary future investment?
Well, actually, the financial community very much supports what we're doing right now, and they want us to finish the projects we've got under construction. One of the things that we in the industry are doing is trying to get the cost down. If you think about the break-even price that it takes to make some of these longer cycle projects, such as the Deepwater Gulf of Mexico or other locations around the world, the industry needs to take a pause and get its costs down.
Right.
So that's what we're doing. But you're right, the industry has canceled some $400 billion in projects, canceled or deferred. And so it will have repercussions down the road because people think of shale oil as being very resilient, and that's going to take up the slack. But the facts are shale is about 5 million barrels a day in that 95 million barrel a day market. And so you're right, we will need other sources of supply. So we are deferring some projects, but that's just because we have to live within our means during this period.
Right now. But you see perhaps getting some new projects online because it'll be a necessity.
Oh, of course. It will. Yeah. We'll need different asset classes are going to contribute over time. We'll need deep water development. We'll need oil sands. We'll need production from many different sources over time. Right. It won't just be shale.
But shale is not enough. So short-term projects now, while the belt is tightening, but long-term you're going to have to do some more spending. You see a lot of spreadsheets. So what is the cost that pisses you off the most?
You know, the thing that's really troubling are the costs of regulations. And in fact, I don't think it's just in my industry, but we're becoming a regulatory state. And just in the last couple of weeks, the administration, they're rushing out new regulations. Two that I'll give you. Everyone wants safety in the deep water, for example, following the Macondo spill a few years ago. And the industry's put in place 100 new practices collaborating with government. Well, they've just rushed out what they call a well control rule in the Gulf of Mexico, and it's just been rushed with inadequate consultation and collaboration with business.
So what's wrong with
methane rules?
Yeah, what's wrong with the well control rule?
Well, in some cases, it doesn't provide the flexibility given the geology that we encounter. Most of these are technical arguments, but our drillers put in 6,000 hours of research trying to help the administration. And in our view, they've rushed it out with, with inadequate consultation with the industry. And my company spends a lot of time trying to be supportive of government and their objectives. But it's been that, and then it's the methane rules.
And tell us about the methane rules.
Well, the methane rules really are around typically around fugitive emissions. But they've been coming down per unit of production by actions the industry have been taking. And yet they're putting in place new regulations that are multiples of the costs of other actions that could be taken to abate greenhouse gas emissions. So it's just a matter of pushing in place more and more regulations, and the EPA and other agencies either don't do cost-benefit analysis. The EPA doesn't have to do cost-benefit analysis. I don't know if many of you realize that, but they don't have to do cost-benefit analysis, and so they don't. And sometimes when agencies do cost-benefit analysis, we don't think they strike the right balance.
Right. Of course, I think the Supreme Court had a view on some of the analysis on coal-fired plant emission rules, right?
Yes.
So when you look at that spreadsheet, how do these costs show up? Is it like legal, 20 million? Like, what does that look like to you as a manager?
Everywhere. Yeah. They show up everywhere. They show up in downtime, for example. Certain types of inspections that we don't think are necessary, you'll take rigs out of service. That's downtime that you're paying.
Right.
And so it comes across in all manner of different costs, including legal costs at times.
Now, of course, the deepwater spill in the Gulf was a bad incident.
Absolutely.
Certainly environmental impact there. So what is the right standard,
But that's why the industry responded. No one has more interest. If you look at what the toll that spill took, no one has more incentive than me and the other operators there to do our business safely. It's, if we don't, it's an existential threat to the company and to the environment. So no one has more interest than me in doing our work well. And that's why the industry has put out over 100 new improved practices consulting with government. What I'm saying is this is another layer of rules that we actually think won't make our business any safer.
But those rules probably aren't going away. And the Trump administration, I don't know what's going to happen there, but they're probably not going away.
No,
you got to live with it, right?
You asked me what I didn't like. I told you it's some of the regulations.
Yeah.
And look, we all want clean air and clean water, so it's not the objective. Every new regulation that's put in place, whether it's in my industry or others, has a noble cause. Yet it's very hard to have a balanced discussion about the real costs and benefits from the regulation itself.
Well, it's very interesting to see, at least from the public mood, if you look at the Keystone situation, that pipeline not going to be built. If you look at a lot of the public thought around climate change, greenhouse emissions, it feels like the public mood has changed and turned a bit, and the oil companies of the world are on the negative side, the opposite side of that perception. How do you view how you, as a company, are viewed right now?
Well, you know, I wake up every day and we are in a noble industry. Light, heat, transportation by land, sea, and air, mechanized agriculture that gives you the food you eat this morning, the clothes you wear, synthetic or natural fabrics. Every aspect of the standard of living that we enjoy today and the standard of living that's been improved over the last 150 years is due to fossil fuels. So we're a noble business, and the attempt by some to vilify our industry is really troubling to me.
Yeah.
You know, the lights wouldn't be on without my industry, And so we have a history of being able to address environmental concerns. If you go back to Great Britain, a century ago, it was the black clouds and smog in the UK.
Right.
If you think, I grew up in California, the quality of the air in the San Francisco Bay Area was very poor when I started. Well, we've taken 98% of the emissions out of gasoline. So we can respond to some of these challenges. I'm not saying we shouldn't respond, but some of the, I guess I would say, polarizing rhetoric, I don't think is helpful, particularly on the subject of greenhouse gases.
But you are being vilified, and it feels like more people are sort of coming to that line of thinking than they have before, right? I think about the arc of history, and what does the arc of history say to us? The arc of history probably says that fossil fuels, probably past our professional careers, they will diminish as a contributor to the overall energy profile of the globe. Would you not agree with that?
Well, the arc of history will say that the pathway to prosperity is through fossil fuels, and it doesn't mean we don't need renewables. We do. We need nuclear. We need all forms of energy. But if we're going to make progress on any environmental issue, I think we're going to have to stop talking past each other and stop trying to vilify the companies that are responsible for every aspect of your standard of living.
Right. And people who say it, you are morally, corrupt is not the right word, but morally in deficit because you are contributing to climate change, your response to them is what?
I travel to Africa. I travel to developing Asia. Morality is trying to bring fresh drinking water to these people. Morality is trying to bring affordable energy to these people. And we have billions of people that are living in abject poverty, and they need affordable energy. So that's the morality. The morality is 50% of Americans live paycheck to paycheck.
All right.
And to artificially increase costs on the average American, to artificially increase costs on American business so it moves. In the UK, they talk about energy poverty now, because policies have tripled electricity costs. Businesses are leaving Germany. So where is that morality?
Right. Well, the Attorney General of New York, for instance, views the responsibility. He's been subpoenaing ExxonMobil for what he says is their climate denial around the science that they were creating and what they were doing and saying publicly. What's your feeling about that line of attack in the legal system?
Well, ExxonMobil can speak for themselves.
Right.
So we're not part of that litigation. We don't do original research on climate change.
Right.
But this pattern of vilification, anyone who's concerned about civil liberties in this country should watch this case very carefully. The idea that companies can't participate in research, the idea that we can't participate in the public debate, can't express an opinion, is something we ought to watch very carefully. It's troubling.
Let's take on one more question, then we'll throw it to the audience. Let's move to a lighter topic, the presidential election. Who's your person?
Notice I picked up the water glass.
It's a nervous tick.
No,
who's your person?
You know, I'm very fortunate in that our company doesn't take position on presidential elections.
Let me say this. How is Chevron preparing for the next administration, whoever it may be?
We're watching very carefully the two apparent candidates
Yes.
to see what their positions actually are,
All right.
because I couldn't tell you today. And so we'll watch their positions, and if we're asked to provide input as they formulate their policy, I'll be happy to do so.
Does it really matter to Chevron who the next president is? I mean, when it comes down to it, does it really matter?
Policy matters to us, so yes. And look, we engage with governments all across the political spectrum. We're active in Venezuela today.
God bless you.
We're active in many different countries, and one of the things that distinguishes American companies from some others is we're independent economic agents, and so we try to conduct business as best we can up to our values and the laws that are in place with a variety of different governments.
So to the thing that you guys can control the most, let's say the price of oil, you can't really
I can't control the price of
No,
oil.
I'm saying you can't.
I want to be clear about
Presidential election, you can't do that. What is the thing that Chevron can control that will have the biggest effect on its success or lack of success in the coming year?
Well, certainly we can control how we execute our business. So, for example, we've put in an enormous amount of effort in recent years around process safety to make sure that, in simple terms, we keep oil and gas where it belongs in the tanks and pipes where it resides. And if you operate efficiently, that's also a low-cost strategy. We've got to be very efficient in how we spend the capital. and we got to get our costs down.
So you got to get your
So
costs down.
these are the things that we can control. We're price takers, obviously, in the marketplace, but we can focus on our costs. And that's
Baker
what we're
Hughes,
doing.
Halliburton, do you think it was good that deal
You know,
went kaput, or?
you know, we didn't oppose that transaction, and so it wasn't an approved transaction. In general, we like to seek a healthy and competitive atmosphere out there, and so.
So wouldn't you want them competing against each other?
Well, it depends on the product lines
Yeah.
that they have. As I say, we didn't oppose it because we thought there was adequate capacity. If you see stress and bankruptcies taking place among smaller companies in the oil and gas producer set, it's really stressful for the service companies because their activity levels are down significantly, and they're having to consolidate, cut costs, and ultimately, it may create shortages of some of those services and skills that they
Okay, it's
carry.
gone by so fast. I don't know how we got to Q&A already. Do you expect to do some M&A of maybe some things that are in bankruptcy court right now?
You know what? Most of the solutions that are being worked out for the troubled companies tend to involve people from this city. It tends to involve financial solutions. There's a lot of money out there, whether it's hedge funds or private equity. And so there's plenty of opportunity to work those out. You haven't seen as much M&A activity, and combining two troubled companies doesn't necessarily solve a debt problem.
Well, Chevron isn't a troubled company. I hope that's not what you're saying. Do you want to buy anything, or it's all just too small, it's not worth your while?
We take a look at that. Over the years, we acquire leases, we acquire discovered resources, and we have bought some, and we have acquired companies in the past, but we haven't seen the right value matchup. So we keep an eye on that space, but to be honest, most of my focus right now is internally. We got a lot of work to do
All right, a lot of
internally.
spreadsheets. Okay.